Hi, Assalamualaikum. Today I will present the background of 5 different companies in Malaysia. All of these companies are Sharia compliant. First, Temipak Holding Berhad, incorporated in 1979 under the industrial sector. They manufacture and sell packaging materials. Their financial year end on 30 June and their auditor is KPMG. Second, Timberwell Berhad, incorporated in 1997. They are also in the industrial sector, focusing on forest management and timber trading. Their financial year ends on 31st December, audited by Baker Tiley. Third, Signature International Berhad, incorporated in 2006. They are in the consumer product sector, focusing on household goods and management services. Their financial year ends on 31st December, audited by UHY. Next, Fajar Baru Builder Group Berhad, incorporated in 1993. They are in the construction sector, doing construction and property development. Their financial year ends on 30 June, audited by Crowe Malaysia. And last but not least, Excel Force MSC Berhad, incorporated in 1994. They are in the technology sector, developing software application solutions. Their financial year ends on 30 June, audited by TGS-TW. Okay, that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hanis binti Azmin, nombor matri S805595. Now we will be looking at the application of MFRS 15, Revenue from Contract with Customer. MFRS 15 framework relies on a core 5-step model to determine how and when revenue is recognized. In this slide, we will walk through step 1, 2 and 3 using real-world example from Malaysian public listed companies. The process begins with step 1, where we must establish that a valid contract exists with a customer. Contract usually involve either the sales of goods or the rendering of service. For instance, companies like Temipak Holding Berhad, Timberwell Berhad and Excel Force MSC Berhad engage in the sales of goods. On the other hand, providing service is a core activity for companies such as Signature International Berhad, Fajar Baru Builder Group Berhad and Excel Force MSC Berhad. Once the contract is identified, we move to step 2, which is to identify the performance obligation essentially, the distinct promises made to the customer. This can be broken down into single or multiple obligation. A single performance obligation means the company has one distinct promise to deliver. Example include Temipak Holding Berhad's Timberwell Berhad and Fajar Baru Builder Group Berhad. A multiple performance obligation occurs when a contract contains more than one distinct promise. We see this in the contract by Signature International Berhad and Excel Force MSC Berhad, where goods and service element might be bundled together. Next, step 3 requires us to determine the transaction price, which is the amount of consideration a company expects to be entitled to. This can be straightforward fixed price, as seen in the operation of Temipak Holdings Berhad and Timberwell Berhad. Alternatively, it could involve an upfront fixed price, which is typical for structural or long-term system contracts managed by Signature International Berhad, Fajar Baru Builder Group Berhad and Excel Force MSC Berhad. In step 4, if a contract has multiple performance obligations, we must allocate the total transaction. If there is only a single obligation, we allocate 100% of the price to it, which applies to Temipak, Timberwell and Fajar Baru Builder Group. If multiple obligations exist, the price can be split proportionally based on relative standalone selling price as practiced by Signature International Berhad. Excel Force MSC Berhad also utilized the standalone selling price method to ensure each software or service component reflects its independent value. Finally, step 5, where revenue is actually recognized. This happens either at a specific point in time or over time, depending on how control is transferred to the customer. At a point in time, revenue is recognized instantly upon delivery of control. For example, Tomipet Holding Berhad, Timberwell Berhad, and Excel Force MSC Berhad recognize revenue this way when goods or delivery items are handed over. For over time, revenue is recognized progressively as the customer simultaneously receive and consume the benefit. Example include Signature International Berhad, Fajar Baru Building Group Berhad, and Excel Force MSC Berhad, specifically regarding ongoing maintenance or long-term construction service. That's all from me. Thank you.
Next, I will explain the comparison of property, plant and equipment or PPE for the 5 selected companies. All companies apply MFRS 116 where PPE is initially recognized at cost and subsequently measured at cost less accumulated depreciation and impairment loss. Based on the comparison between 2023 and 2024, the PPE balance show different movement depending on each company's operation and asset investment. For example, Timberwell Berhad recorded a decrease in PPE from RM 11.667 million to RM 10.565 million due to depreciation. Meanwhile, Tomipet Holdings Berhad show a significant increase in PPE, indicating higher investment in operational assets. Signature International Berhad and Excel Force MSC Berhad recorded slight decrease in PPE, reflecting depreciation and lower investment in physical assets. Similarly, Fajar Baru Building Group Berhad also experienced a reduction in PPE during the financial year. Overall, the comparison shows that PPE balance are influenced by depreciation, asset utilization, and the nature of each company's business operation.
For this slide, I will explain the investment property disclosures of 3 companies, which are Tomipet Holdings Berhad, Timberwell Berhad, and Signature International Berhad. All 3 companies apply the same accounting standard, which is MFRS 140, investment property. This standard is used for properties held to earn rental income or for capital appreciation. Starting with Tomipet Holdings Berhad, the initial recognition is measured at cost, while the subsequent measurement uses the fair value model. Management also applies professional judgment in determining the fair value of the investment properties and assessing lease arrangements. The value of investment property increased from 279,000 in 2023 to 1.515 million in 2024. The company also record depreciation expense in the statement of profit or loss. Next, for Timberwell Berhad, the company applies the fair value model, where gains or loss from changes in fair value are recognized directly in profit or loss. The value is based on market information and assessment by independent valuers. The investment property value increased slightly from 18.137 million to 18.266 million. In addition, the company recorded significant fair value gains in profit or loss. For Signature International Berhad, the company also used the fair value model, with changes in fair value recognized in profit or loss. The value of investment property decreased from 53,000 in 2023 to 32,000 in 2024. Although the amount is relatively small, the company still complies with the requirements of MFRS 140 for recognition and measurement. The next slide, I will explain the investment property disclosures of Fajar Baru Building Group Berhad and Excel Force MSC Berhad. Starting with Fajar Baru Building Group Berhad, the initial recognition is measured at cost, while the subsequent measurement applies the fair value model. The fair value estimation involves judgment from both management and professional valuers. The value of investment property increased from 182.259 million in 2023 to 199.127 million in 2024. However, in the statement of profit or loss, the company recorded a profit in 2023 but loss of 590,000 in 2024. Lastly, for Excel Force MSC Berhad, the investment property is initially recognized at cost, including directly attributable transaction costs, and subsequently measured using the fair value model. Management applies judgment in determining fair value based on valuation techniques, market conditions, location, and comparable market data. However, there were no amounts recorded in the statement of financial position and statement of profit or loss for both years presented, and there was also no additional disclosure in the notes. Overall, we can see that the most companies prefer using the fair value model under MFRS 140 because it provides more relevant and updated information regarding the current value of investment properties.
This table presents a comparative analysis of intangible asset disclosure under MFRS 138 for 5 nation public listed companies. For initial recognition, 4 companies recognize intangible asset at cost, while Signature International recognized at fair value at the date of acquisition. For subsequent measurement, Timberwell, Fajar Baru, and Excel Force apply cost less amortization. Tommy Park apply cost less impairment losses, while Signature International applies per indefinite impairment testing for trade names and finite amortization for customers' contract. For management judgment, Tommy Park applies the most complex judgment involving future cash flow, 8.6% discount rate, and 4-year business plan. Timberwell and Fajar Baru estimate useful life and amortization period. Signature conducts annual impairment testing, and Excel Force estimate useful life only. For financial position, Tommy Park recorded the highest growth to 8,528,000 in 2024 through acquisition. Signature holds the largest asset base at 1,287,000, down from 1,714,000. Timberwell decreased from 8,227,000 to 8,150,000. Fajar Baru decreased slightly from 369,000 to 360,000. Excel Force recorded RM0 in both years, fully amortized with 2,769,182 amortization charge in 2024. Overall, Tommy Park is the only company showing growth, while the remaining 4 recorded either decrease or full amortization. Thank you.